Uh, Good morning, candidates. It must be 19th of December 2021 in India. As you know, right now I'm in Canada. I'm talking to you about Bank of Baroda substaff to clerical questions asked. In the last question we were discussing was about KYC norms, that is, know your customer norms. Know your customers norms are mandated by Reserve Bank of India. Mandated means it is a must, and why they have been mandated in order to prevent, say, Binami accounts being opened, and also to prevent money laundering. And we take any one of the six documents for verification, like passport, PAN card, driving license, Aadhaar card, then employment guarantee card, then voter ID card. Any one we take, and then we ensure this in order to avoid money laundering. Money laundering means making black money into white money. So that was the last question we saw earlier. Now we will go into next question. They ask, in the interview, what is PPF. If they ask only what is PPF, you can always say the answer is Public Provident Fund. PPF means Public Provident Fund. This is what you can say, and mostly in clerical, sorry, officer to, sorry, substaff to clerical interviews, they may not ask much in detail. However, if you are desirous of knowing about PPF rules, let me tell you now. Say, the PPF accounts are opened up, say in post offices or in the public sector offices or private sector, public sector banks or private sector banks. The rule says the account is opened for a period of 15 years, and you can withdraw the money in full along with interest after the period of 15 years only. 15 years only you can withdraw the money, and in full. Whereas, what are the rules for this? The PPF, the minimum deposit is rupees 500 per year, while the maximum amount that you can deposit in a year, right now it is prescribed at rupees 1.5 lakh. Maximum one can deposit is 1.5 lakh. If you make any deposit in excess of 1.5 lakh in a financial year, the transaction will be automatically rejected. Right now it is 1.5 lakhs. Later on, they may extend it for, I mean, next through 2 3 years when they want to revise that, they can revise it also. But present rule is 1.5 lakhs for quite so many years, 3 4 years, 5 years, like that. Then question is, what happens to the PPF account after 15 years? A public provident account matures in 15 years, but it is not mandatory for the depositor to close the account. You can extend it indefinitely in blocks of 5 years. That is, it is told we can extend it in blocks of 5 years. 15 years period over, you can extend it for another 5 years up to 20 years. Another 20 years over, you can extend it for 25. Then another 5, 30, like that, you can always do it. One option for the account holder is to withdraw the entire amount, including interest, and close the account on maturity. There is also one option. How many times you can extend your PPF after maturity? This is the question asked. In my view, when you opt for extension, you have the option either to continue. For the extension, you will need to inform the bank or post office. In my view, this can be done. This can be done. Um, This can be done for any number of 5 years. First 15 to 20, 20 to 25. I have done up to 20 to 25. Now I'm not sure whether I can do from 25 to 30. What I see here, it is possible. And in case the account holder decides to continue with fresh contributions, he can withdraw up to 60% of the account balance at the beginning of the each extended period block of 5 years. So that means You can extend as many times as possible. No problem. Could you follow? Yeah. And the next question that was there is, can I withdraw the PPF after 5 years? You are opening the deposit for 15 years. Can you withdraw after 55 years? The answer is you can withdraw 50% of the balance at the end of the fourth financial year, or 50% of the balance at the end of the preceding year. Can I close my PPF account after 3 years? No, you cannot close PPF account after 3 years. Premature closures are only permitted after 5 years under specific circumstances, maybe for medical or maybe after the death of the depositor, like that. Okay, these are the point. Here I find in one website 10 rules that investors should know. 10 rules that investors should know. Right now, the current interest rate on PPF is 7.10%. This can be revised by the government once in 3 years, but normally they don't change it quite often. But right now it is 7.10%. PPF interest is calculated on monthly basis. It is calculated on monthly basis, but compounded annually. It is not compounded quarterly. It is compounded annually as at the end of 31st of March. Public Provident Fund is a government-backed savings cum tax saving scheme that enables an investor to accumulate a retirement corpus while saving on annual income tax. The idea is whatever money we deposit here up to 1.5 lakh is fully exempted from income tax. Not only that, the interest we get at the rate of 7.1%, that is also fully exempted from your income tax. PPF account is 100% risk free, and it is one of the limited saving schemes that can beat 6% average annual inflation growth. Recently, PPF interest rate at 7.1%, but there are some other rules that an investor should know. 10 important rules. So, what are the rules they say? Let me see. 10 rules, I think it opening or not opening? Open app. First rule is PPF. I am reading from livemint.com. There is a newspaper, livemint.com. I am reading from there. Okay. Yeah, just a minute. I found it interesting, so I thought I can go through with that. Now it is, I am signing it through Google, and then only I can have access to that paper. Some newspapers, they do it like this. Yeah. Let me see whether I can get that app. What is that? Ppf Rules. Is there any separate rules for NRI? I think NRI cannot open. An NRI cannot make any new investment to a PPF. Namely, any investment must be in an existing PPF, which they have opened while they were Indian residents. For an existing PPF, they may keep contributing it on a non-repatriable basis till the maturity of the PPF. Yeah, for NRI, that is the rule they are telling. Okay. PPF rules. Let me search there. What am I getting? I am getting one more. No, hdfc.com. I think they will permit us to see what are the rules for HDFC. PPF deposit rules. I have already told you about the maximum 1.5 lakhs. Taxation exemption also I have told. Rate of interest also I have told. Withdrawal also I told. Loans. You can take a loan on your account. You can take a loan on your account between third and sixth financial year opening of account. You must repay the loan within 36 months. The rate of interest of the loan is 2% more than the interest you are earning on the account. Okay. Then partial withdrawals from the seventh financial year. You can make partial withdrawals, but you cannot take a loan. Account closure. You can close your account and make a full withdrawal after the fifth financial year for medical treatment of severe or life threatening conditions for yourself and your family or for the purpose of higher education. These are the rules. This can be opened in private sector banks like HDFC Bank also. Okay. Thank you. Thank you so much. So in this video, I have covered mainly about public provident fund rules only. Thank you so much. Bye. But in your interview, they will not ask much. They will ask you what is the PPF open for how many years? 15 years. What is the maximum you can pay? 1,50,000. What is the minimum you should pay? 500. Can you extend PPF? Yes, after 15 years, another 5 years. Again, another 5 years like that. Thank you so much. Best wishes.